It has indeed been a roller coaster ride for semiconductor stocks this year. The chip makers have been caught in the crosshairs of the trade war between the U.S. and China, making the sector very volatile and creating a lot of uncertainty. But are things about to change for the group? Joining us to talk about that is Michael Bapis, Managing Director with Vios Advisors at Rockefeller Capital Management. Nice to have you with us, Michael. Welcome back.
Thanks, Sue. Good to be here.
Let's start, first of all, with Intel's report. A lot of people were surprised that they did so well, given some of the pressures that the chip sector as a whole has been under.
Yeah, look, I think it's a long time coming for Intel. Since we're in the middle of the World Series, let's say they hit a walk-off grand slam with these earnings numbers. And I think, they're, even with this growth, they're still trading at 12 times earnings, which is a low PE, obviously, and they're yielding a dividend of about 2.5%. So in this interest rate environment, not only is it trading cheaply from a valuation standpoint, you're also getting 2.5% roughly to wait and own the stock for the long term.
And is it an Intel-specific success story, or do you think that translates to the entire chip sector?
That's a good point. Look, we are in the middle of a technological revolution that we will never see again probably in the next 500 years. So data is more important than ever, as we just saw. And from the cloud to everything that they provide, everything that Intel provides, until someone comes along and starts to compete with them in a meaningful way, I don't think, the sector's going to grow just because of technology, but Intel is definitely the leader in the sector. And I see that continuing for the foreseeable future. Look, it's not even up that much. It's up, I think, 11, 12% this year, while obviously the S&P is up much higher. And it's trading at the middle of its range. It hasn't even hit its highs yet. So you'll see this 12 to 18 months out higher. We do have a little bit of fear with the trade wars, but I think like anything else, like any other name, any other equity, anything in our world today, those will get solved at some point, hopefully sooner than later. But I don't think it will have an impact that everyone's expecting.
It was interesting that you say that, because the company has basically given the indication that they think that they are better prepared to handle the trade war than some other players in the sector. Would you agree with that?
Yeah, I think they probably are. I mean, look, they've expected it for a long time. They're repatriatizing some of their plants. They've expected this for let's say a year now, and even though it's not solved, they're very prepared. And I think I'm sure they've spent the money to be able to manage through it as it gets solved.
Is it your favorite name in the space?
Definitely. It's one of my favorite names in general, especially technology as well as just in general.
Michael, thanks so much.
Thanks,
Michael
Sue.
Bapis with Vios Advisors at Rockefeller Capital Management.